In this lesson, you will learn how to journalize issued share capital. So here we have a question which is taken from Cambridge A-Level Accounting past paper. Okay. So before we start here, we will see the question first. Key limit says statement of financial position at 28 February 2021 included the following. Okay. So here we have some equities. We have issued capital, we have share premium and retained earnings. Okay, $2 here, $914,000. Okay, then what happened? Then here on 31st August 2021, the directors paid an interim dividend of $0.05 per share. Okay, so here we have calculated interim dividend. Okay, if you are confused how to calculate interim dividend, you can watch the previous lesson. Okay, I'll link to this video in the description box. Okay, then we have here on 1st December 2021, the directors made a bonus share issue on the basis of 2 ordinary shares for every 3 ordinary shares currently held. Okay, that means for every 3 shares the company will issue 2 bonus shares. Okay, for example, if you have 3 shares, you will get 2 bonus shares. If you have 6 ordinary shares, you will get 4 bonus shares. Okay, so this is the basis. Then what happened? The directors wish to leave the reserves in their most flexible form. Okay, so here what are reserves? We have here share premium 122,000. Okay, it is one kind of reserve. Then we have here retained earnings $342,000. Okay, so business can issue bonus share from the retained earnings as well. Okay, there is one more general reserve. If there is general reserve, business can use that amount to issue bonus share. Okay, good. Now here we have to journalize. Okay, very good. So here it is written that once again, directors wish to leave the reserves in their most flexible form. Okay, so first of all, we will see the value of bonus share. Okay, issued share capital we have to calculate first of all. Okay, so here business issued 2 bonus share for every 3 ordinary shares. Now how many shares business has right now? So here we see the ordinary share price $0.50 times here share capital is $450,000. Okay, so here we see 900,000 shares. Okay, so now for this 900,000, if 2 shares for every 3 ordinary shares, so how many bonus share will be for 900,000 ordinary shares? Okay, so for 3 ordinary shares, there are 2 bonus shares. For 900,000 ordinary shares, how many will be bonus share? Okay, so we will cross multiply. Okay, so how? We will write here 900,000 multiplied by 2 divided by here 3. Okay, so we get here 600,000 bonus share business has to issue. Okay, now what is the price for this 600,000 bonus share? So here the share price is $0.5. Okay, so here 600,000 shares times 0.50 per share, so we get here $300,000. Okay, this is the price for all bonus share. Okay, all 600,000 bonus shares. Okay, so we will write issued share capital. Okay, issued share capital. Why issued share capital? Because for the bonus share, business will issue more 600,000 shares. Okay, this is issued share capital. So how much we got here? We got here $300,000. So we will write on the credit side 300,000. Okay, so you know share capital share capital, it is a liability. So when liability increase in the business, it will be credited. Okay, so we wrote here on the credit side. Now question is, how did business manage this amount, this 300,000 amount? So here it is clearly indicated. So here directors means the person, the people who maintains, who organize the business, okay, who operates the business. So what is written, they will leave the reserves, okay, in their most flexible form. Okay, so here they have reserved two reserves. Here they have share premium and retained earnings. Share premium is $122,000 and retained earnings will be here $342,000. Okay, so these two reserves directors used to issue these 600,000 bonus shares. The price for these 600 bonus shares is $300,000. Okay, so now, so here share premium, it is a liability, it is a reserve means liability. Now liability will be decreased as it will be used for other purpose. Okay, so when liability increase, liability will be credited. When it is decreased, it will be here debited. Okay, so let us write here first of all share premium. So here we will take all $122,000 to recover this amount. Okay, so now $300,000, it is the issued share capital. For this $300,000, we have already taken share premium $122,000. Okay, so now how much remaining? So here we see $178,000. So we need more $178,000, okay, to recover this amount, to this share capital $300,000. Okay, so now we will take $178,000 from the retained earnings. Okay, retained earnings, we have sufficient fund. Okay, we have here $342,000. Okay, so easily we can take this $178,000 from this amount, right? So here we will write here retained earnings, it is also liability. Now it will be decreased, so it will be debited. Okay, so we will write here retained earnings. So here we will write $178,000. 28 February 2021, retained earnings was $342,000. But at the end of the financial year, retained earnings will be decreased because this amount $178,000 is taken from this amount. Okay, so this is how you need to generalize when business issue bonus share. Okay, next tutorial I will show you how to calculate retained earnings closing balance. Okay, it is also very important to understand because it is a very common question for your exam.